have your investment goals changed? If not, stay calm, switch off the TV, don't buy newspaper.
I have to say that, I'm probably gonna retire. Same way if there is a war, if there is an inflation or whatever, and I need money for my retirement. So I don't think anything changes here. But unfortunately, in the reality, it doesn't work like this. People think now, I've seen many
Don't you
clients,
see into the future? Almost 2/3
yeah.
of all clients.
So
and only I think 0.6% answered that they would sell.
0.4.
The same in Poland.
So we're also looking for the sources of bad news, and maybe we follow Finax less because they're too optimistic in this situation. So you prefer these bad issues, and this is the real challenge to set up your mind in correct way. Hello, all intelligent investors. My name is Radoslav Kasík. I'm co-founder of Finax, and I welcome you to our special video podcast in which we'll be talking about market drop and proper investor reaction and how to act in this special situation. My guests are Tamara Vrhovec-Sekáč, who is our country manager in Croatia. Juraj Hrbati, CEO and founder of Finax.
Hello.
And Przemek Barankiewicz, who is country manager of Poland. Hello.
Dzień dobry.
Okay, hello guys. So I think most of our followers, but even new potential clients or people who don't invest are aware of current market development, that the situation this year is not so green, not so bullish and perfect as it used to be in past 10 years. So since the beginning of the year, markets have been dropping or falling. This includes equities and bonds too. So it's pretty specific situation. We have many new clients who invested just a few months ago or a few years ago and maybe didn't have a chance to experience this, and we receive a lot of questions what to do, whether it is better to sell their investments and come back to the market and invest it again maybe later. Also the questions how to handle it emotionally, I would say. So we're going to talk about this situation and proper behavior. So maybe let's start with cruel question. How do you see the future market development, maybe in a short time, in the next months, whether we will fall even more or whether all the wrong is behind us? So Juris, let's start with you, as you are the most experienced with financial markets in this group.
Yeah, so maybe first let me just say hello again, and I'm really happy that actually it's our first podcast that we do in English, and I'm very enthusiastic about it, as so far we always had we wanted to be as local as possible, but we feel this time it's time to show up our faces and also to enter into Croatia, also enter into Hungary and Poland, and to show that we are here and we want to also address the situation to the clients and be with the clients as much as possible. So in coming back to your question, Rado, well, I don't have a crystal ball. Well, and honestly, I can't say, how is the market going to be in 2-3 months. And, looking back, like in 2020, when we had the pandemic, at the time the market dropped 20-30%. Who would guess that in 2 years' time, the markets, like until November, almost doubled. That a lot of especially technological stocks have more than doubled their valuations. And if you would ask me at that time, and I would make this prediction, you would be considering me as a crazy guy. So honestly, at this time of with the current situation, I don't have a crystal ball, but I know what I do. When every time when there are market drops, such as now that the market has dropped, some of the indexes 10%, some 20, some even more. That's a situation I always take in favor of mine. I'm pretty calm. I'm here on the market already 20 years. I have had a lot of crises behind me, and there's a time where I little kind of step back, look at the situation, and I always feel it's a time to buy, or it's a time to to keep actually staying with my investment goals, which has been set it for a very long time, and such a shortfall, like 2-3 months shouldn't anyhow like influence my investing.
Okay, Tamara, do you find some parallel, maybe some similar situation in the past, like that can lead us out of this way and lead our thinking, and maybe some doing, like some concrete steps?
Well, as we, I think, always communicate, basically all our clients know that, being invested, being in markets means that, yes, from time to time, markets will be volatile. There is a certain uncertainty at the moment, inflation, all these things which have happened in the past as well. So what we like to say is always looking at the historical performances. All these things are in a way calculated in performances and in predictions that we do. Like Juraj mentioned, in our onboarding, we have these questions which are there for a reason, and it's very important always to be honest with yourself when you're answering them. So, if you have answered there that you're going to stay on the market, or that you're going
you mean
to
the question, what
yes.
would you do if the market
if the markets dropped 20%, it's very important, because as we always say, the investment strategy is in a way created for you, for your needs, for your possibilities, and for your financial situation. So there is no reason when markets fluctuate to differ from your original investment strategy.
Yeah, investment strategy and potential results include
exactly.
Also
as
this
Juraj
pessimistic.
mentioned, only 2 years ago we had a situation that the world has not seen before, and we were all thinking what to do, and there were a lot of clients at that time asking what to do and how to do. There was a sudden market drop, and some of them thought, maybe I will wait until they drop more. It's we go already in the sphere of active investing when we talk about that, and that's what we always say not to do, because it's really very difficult to say, whether they are going to drop a little bit more or not, or they're going to rise, whether there will be a W in Corona or not. Exactly. So, it's we don't have the crystal ball, and anyone who would say that they know what in a short-term period we can expect, I think volatility, a little bit of uncertainty, but as we say, it's a normal thing when we are invested in markets.
Yeah, at the end of the day, we will get some returns.
Yes.
Przemek, what do you think? Why could we expect again this time that the markets will return and reach new highs?
Mm-hmm. Yeah, I don't have a crystal ball neither, but I remember even in 93, 94, the biggest bull market and the bear market at Warsaw Stock Exchange. And I can say that I have never learned so much as I learned during this market downturn. And what I learned basically about myself, also, my mental attitude, but also about the importance of numbers. Yeah. And I believe numbers are behind the Finax philosophy, long-term investment philosophy. So let's focus on those numbers. Yeah. So far this year we had for the first 4 months we had the biggest decline in bonds for 100 years, and the biggest decline in stocks, American, since the Second World War started. Yeah. So taking those two into account, I assume that is a once in a century event that we have just experienced. So based on it, we are after it. So based on it, the future. Let's draw some conclusions on it. Yeah, and also when it comes to, as I said, I don't have this crystal ball, but we are recording this podcast when let's say the biggest index S&P 500 is still in the market correction phase. It's still a bit down to the bear market. And when you take this, let's say, only in this century, so I mean from the 2000 on, we had so far experienced 11 correction markets, such a situation as we experience now, and we are still growing. Yeah, so in the long term, and investment is always bright. Is always bright, and my suggestion: long-term investors should use correction to increase their portfolios, not to be frightened. Short-term investors, speculators, they can be afraid of correction market, but not the long-term investors.
Okay, thank you. So maybe tell us your recommendation for investor, Yuri. For example, I invested 4 months ago my savings, 4 years ago my savings, and now I watch its value dropping, and I'm kind of nervous whether it will drop even more. And maybe also recommendation. Okay, I'll leave it for the next question. So what to do? What should I do?
Actually, it's funny that you mentioned that 4 months and 4 years, because I think there is quite a big difference. Like my parents did their first investment 4 years ago, and they are now still in plus. Like the investment is 20 or even 25% plus, and that makes them pretty calm. Okay, from 40% profit, they dropped to only 24% profit. That's pretty good. On the other hand, the investors that had invested with us, for example, only 4 months ago, they are most probably in minus, pretty considerable minus, around 10%. And so the difference, from the emotional point of view, is slightly different there. But on the other hand, the outcome for both of them is probably the same. It's emotionally, it's pretty hard to accept that my investments are losing, and every time you have you got a feeling that you should do something about it, you should do some change, react on it or something. But that's actually one of the worst things that can happen to you. And in these times you should focus really on your ultimate, the strategy that you've been setting up your investment. And our average horizon for which the clients are setting their portfolio is 17.7 years. That means most of our clients have really long investment horizons, and in that respect they should be focusing on their long-term goals, and shouldn't be making any difference. But again, as I said, it's pretty hard to do it if you look at your account and you see that, wow, I'm 10% minus, or my 40% profit dropped to only 24%, and you have you want to do something, but the best thing is actually not to do anything and to just continue with your previous goals that you set it yourself.
Tama, what would your recommendation would be? For the average person who maybe heard all these things before, you can read it on internet, all asset managers have these recommendations, that you have to stick to your investment strategy, just hold on and wait till it comes back, and
or use it. Yes.
It will bring the fruit. So this is the rational part, of all investing. But then there's this emotional side, as Yuri said. And there's all the time the fight between those two sides in each head. I think it's similar with us. Sometimes we experience it too.
Everybody's head, ours as well, so, we are like normal people.
Yeah. So, but what are the recommendations, how you can handle this, how you can go through it, pass it, and make the rational side of your brain to win over this emotional side? What are your recommendations, how to do it? Like concrete, like specific steps.
Well, we know that
generally, what do you do?
Generally in life, it's good to have rational decisions, not really emotional. And there is this whole, I would say, part of economy which is really handling this question about behavioral economy. About how people make decisions under certain emotions when it comes to investing, and yes, it's a normal thing. There is this saying that the best investor is the dead investor, and the second best is the one that forgot that has an account. So in this case, this is really it. We always say, if you're a passive investor, there is really no reason for you to go and check how your investment does every single day, because we don't do active buying and trading. We don't look for the winners, and we don't do anything short term. So when it comes to long term, like Juraj mentioned, there is still this pension waiting for you, and probably very low pension when it comes to the state. So you need to do something. Nothing changes in these few months regarding your pension or such long-term goals. And that's something that we have to keep in mind. We know that when we communicate to clients, it reassures them, but then again, after you read the news, and we know that bombastic headlines and the negative headlines always have a higher reading rate than the positive ones.
Yeah, especially in these times.
Yes, when it comes to your money, which is obviously one of the most important issues in people's lives, it's something that we all like to read. What is going to happen? How the inflation is going to, affect me, my home budget, my family, and so on. And the same is with the markets if we are invested. So this is one thing that we have to know. Even when the markets were doing really well for 10 years, we were reading that the crisis is coming, one day soon. Then when the crisis comes, then we hear, it's usually catastrophic, headlines and this kind of predictions. So it's something with what we have to put on side. We also see it with the war and with this. Newspapers are normally full of this negative information, and if we feed our brain with that, this is how we are going to act. We are going to go into uncertainty, into fear, into thinking what is going on, and so on. But if we are able to kind of pull back and think for a moment and try to calm down and not get too emotional, and look at the historical performances, statistics, stuff that is, numbers are talking for themselves. We know that, like Juraj mentioned about his parents, we talk about 2018, so we know that 97% of our clients who invested in 2018 are still in plus. So, which means if you are long enough in the market, these kind of things don't really affect you too much. And we know that it's a normal thing, it's happening. Yes, it's tough, especially if it's your first time. But on the other hand, for everyone who has been waiting to invest and hasn't invested, it's a perfect timing, because with the compound interest and the long-term, investment period in front of you, you have really good chances to, in the end, be very happy with your outcome.
Yeah. I can imagine my situation, for example, when Russian invasion into Ukraine started. So yeah, all of us were scared, but. Regarding the markets, I was a bit happy, because I'll be buying cheaper.
I was the one calmer because I had experience with that. Yes.
But as I remember, I was more worried for the clients, because I knew that for many it's a new experience, so they cannot handle it. So maybe specific recommendations. So turn off the TV, you say, turn off the social media.
Definitely social media, because I think social media are in this sense even more powerful, that touches your emotion much more than a regular maybe TV or media. So I think especially, like all these, we have here a lot of YouTube and Instagram investors, investing through after seeing some influencers, etc. So, especially this can be pretty harmful in this respect.
I have one idea. I just got on my mind. Michal Vaculik, who is head of our elite department, he sometimes shows in his presentation, in his slides, like the small paper. Yes. I don't know whether it's gossip or it's true. It's a paper of some Wall Street trader, like on the floor of the Wall Street, and it said like there were few points regarding
a reminder.
Like what we're saying here. Maybe put it down on a paper, and all the time emotions got over me. Just check it, that the market drop is nothing unusual. It happens like once a year.
It's your mantra. Repeat it
maybe there's a 14% market drop on average each year, and so on. So repeat it. It's good, and because sometimes exactly it's the issue, or the issue is that all of us have intention to focus more on this bad news. So we're also looking for the sources of bad news, and maybe we follow Finax less because they're too optimistic in this situation. So, you prefer this bad issue, and this is the real challenge to, set up your mind in correct way. Przemek.
Yeah, full agree with all of you guys, because I was creating those terrible headlines for 20 years for working for media, so I know how it works, and there is some kind of also behavioral finance or behavioral symptoms behind. The perception of fear is 3 times bigger than the perception of happiness. Does it mean that
in the media, those articles working with your fear are 3 times more read it?
Even more. So it's and you can also imagine that media are changing to the digital business model. They are, let's say, they make money on clicks. And you can imagine the next steps. I would only say add one thing to all what you have already said. I would recall myself what I have written down in the Finax questionnaire when I set up the account, and there is a question about how would I behave if the market is down by 20%, and let's recall it, because I think the vast majority of people, of our clients also, confirmed there that they would buy even more, not even do nothing, but buy more. Yeah,
almost two-thirds of all clients.
So
and only I think 0.6% answered that they would sell.
The same in Poland. So just ask yourself, have your investment horizon changed? Have your investment goals changed? If not, stay calm, switch off the TV, don't buy a newspaper.
I have to say that, I'm probably gonna retire. Same way, if there is a war, if there is an inflation or whatever, and I need money for my retirement. So I don't think anything changes here.
Okay, Przemek, let's focus on a person who is not investor yet. And person who, for example, has some money on bank account. This person has had it for some time, maybe a couple of €1,000 or maybe tens of thousands euros. And this person has been hesitating with investing and maybe waiting for some opportunity. Now we have in all countries pretty high inflation, like we haven't experienced in maybe 30-40 years. So what's your recommendation for the person like this? Like what to do with this money? Invest it or wait?
As we always say in Finax, first set up your reserve, and then the rest should be invested, regardless the market timing, etc. We are not here to play the market timing, but I would focus on alternatives. What alternative do you have when you have a 20% inflation rate? Yeah, so it's higher in Poland since 99, for example. So what do we have? We have a banking account with still in Poland close to zero. Now the government is making some banks, state-owned banks, to put it up to 5-6%, but it's still half of the inflation rate. So you are losing half of your real purchasing power of your money. So it's banking account not. Real estate, I don't know how is it in your countries, but in Poland we have a really growing interest rates for mortgage as well. So probably the demand for real estates, which are very popular in Poland, probably also in Slovakia and in Croatia, will decrease. I cannot imagine why the price would go up still further as it did. And liquidity problems, all of this stuff. It's the real estate market is not, our real competitors. I mean the financial market competitors. Yeah. Then we have bonds, but they are really low interest rates. You have a gold, which is for some gold maniac is a good choice, but only if you have 2-3% of your portfolio to be close to inflation. Yeah. So if you don't have any alternative and you are taking care of your money and you want to at least keep the real value of your money, then the financial market, stocks and bonds is a mixture. I think this is the only product, the only solution. Even if there is a stagflation threat, but I don't know how it's in Slovakia or in Croatia, but in Poland there are some prediction that it can be the case in the second part of the year that we are entering the stagflation phase. So coming back to the, let's say, 70s, when there was a stagflation in the States, the market, the stocks market were not perfect, but at least it kept the real value of your investment. So taking all of this into account, just invest and keep buying.
Yeah, exactly. And especially in this situation, I like your point that like the real estate is at the top. Yeah, for example, also in Slovakia, I think it's everywhere. Also in Poland, same in Croatia. And you have, in comparison, equity market and bond markets, which fell 10, 15, 20%. So it's even much more interesting to start. Yeah, and one other question, Julie, on you, that if you because the motivation of people who are thinking about exiting investments is to sell it now and buy it lower, yeah? Because you see in the media all the headlines are negative, the outlook is negative, everyone just says that that the market will drop for sure, even more. So do you recommend this strategy, just to, for example, sell it now, save some money or save some value of the investment and buy it when it's lower?
Yeah. If I would have this crystal ball, I would recommend it. But let's face the situation. For example, you look at the long-term graph, right? You see, it's coming up and down, or this way, and and you show the graph to anybody, and he would definitely point you the moment where he would buy and where he would sell. But unfortunately, in the reality, it doesn't work like this. People think now. I've seen many
Don't you
clients,
see into the future?
Unfortunately, I don't. But for example, even in the pandemic, I've seen many clients. They were scared. They sold some of their investments. They thought they would come back when the market is going to be lower. But at the time the market is going to be lower, the media will give you even much bigger pressure. You think this is the end of the world. It was like, oh no, this is not definitely the right time. But then if you look in all those graphs historically, how quick was the rebound of such recessions, from the very early bottom. You probably, it's very, very little chance you actually would make it. And all those investors that has been with us when the pandemic started and wanted actually to exit it and wanted to enter the market on a lower prices, like most of them failed, and they failed big time. And they actually at the end they entered the market 10-15% more, or actually they never entered the market again, because they always thought, well, it's bigger, and they lost the train, and the train is gone, and actually, so it's so hard to time the market in this way that I never been able to do it myself. I only know that, that's why I invest regularly, and when I see a market drop, I try to dig into my wallet or into my bank account as much as possible and see if there is anything. But through my strategy that I'm investing almost everything what I have available, because I want my money to work all the time. So I don't recommend this strategy. And if you look at the statistics, on the long-term statistics of such trading, clients or retail clients are always losing on it, and they are not able to time the market. And with all the emotions and with all the media, when you hear from every single radio, TV or newspapers that now the market has dropped yesterday 5%, it's so emotionally tough to enter the market that there is very, very, very low chance that a regular investor would actually hit and buy it at the very bottom.
Yeah, because at the bottom the emotions are the biggest. Yeah, the panic mode is fully on. It's exactly at the bottom, so that's why usually when we are at the bottom, no one is willing to buy. Eh?
Yeah, people buy when it's 5 to 10%, but then when it goes lower, then everyone is waiting what's next, because they get paralyzed.
If it gets even lower. And there's also one good point, one statistics why this is not generally recommended, because the best days, like with the highest profit, usually happen after the biggest drop. And if there's a nice statistic, I don't know, if you miss just 10 or 20 best days, for example, in past 20 years, your average annual return would be half of what market did. Yeah, so that's also important recommendation. Okay, maybe some advices for the people who just started to invest. For example, they started investing at the beginning of the year with the goal to beat the inflation, because the inflation rate was already pretty high at the beginning of the year, and now the inflation is still 10-12% in this region, in Poland even more, and the investment is in the loss. So what to do now? Yeah, Tamara.
Well, I think the first question is if we think short term or we think long term. Short term, as we know, it's really difficult, and we always say that short term investments are something that it's very difficult to guess, exactly because of these situations and volatility that can happen. So in this case, I think what you have to think about is, like, if your goal was coming up in 5 years or 3 years, or if you can adjust it, if you can prolong it, if some of the things, many times we say that these short-term goals can be prolonged in a way. So it means that it can give you extra months or even years on the market, which would help you in this case. And when it comes to long-term investments, we know that, when we talk about 10 or more years, that the market does its thing together with the compound interest. So in that way, we have transparent accounts in Finax where people can see real accounts from Dominic, from Mr. Hrenko, or even some Croatians. And you can actually compare exactly this, when somebody invested and how long they've been in the market and what are the differences. So obviously, when we look at the accounts that were opened, transparent accounts recently, they might be in red, and probably the short-term performance is not as good. But as we say, already 2018 would be very much in green. So this is something that we have to think about, and even people who invested, there are some calculators done now in Croatia by our partner Tony Milon, who is exactly doing this and showing if you're invested, for example, 1st of January 2020, how your portfolio looks like now, and your portfolio is probably still in plus depending on your strategy, but the longer you have in the market, and if you can adjust maybe these goals for which you're using your money and prolong a little bit this time, as we know, it's hard to say how long this volatility will last for, but I guess we are looking at a few more months at least, right? So it's just something that often people think that they might need money in 3 or 5 years, but at the end of the day, it's something that is adjustable, or they might not even need it. So they actually have many more years ahead their investment, and they can use it.
So just stick to the investments, and
exactly.
it will come back. Przemek, you mentioned also at the beginning that the fixed income markets, bond markets, experience in some way unprecedented decline. This can be issue for conservative investors, as they have shorter horizon, or maybe smaller risk tolerance, and they got some hit now. Yeah, they got some hit because of these fixed income portfolios, and there can be issue because of these people might need that money in a short time. Yeah, for example, at the beginning of the year or in 1 year. So do you have some specific recommendation or some specific advice for them? Like whether, to keep investments or to withdraw it?
I would definitely we are after such a downturn that it's on the bond market, that it's probably, if somebody sells now, then he can hit the bottom, yeah, to be honest. So all the forward rate agreements, all these predictions for the interest rates for the future says or predicts that we are close to the high of when it comes to interest rates. So the potential price decrease for bonds is very, very limited, and never forget what's the real task of bonds in our Finax portfolios. They should stabilize in long term, should stabilize return, not give a extra returns. From the Polish that can be interesting from the Polish perspective, because we are in Polish zloty system, and it's still a kind of a, let's say, balance amortization for the Finax, for example, portfolios. If we have like let's have a look at the Polish zloty versus dollar, which is in stocks majority of this currency, and to euro. Dollar has increased by value by 10% this year to Polish zloty, euro by 2%. So the results of even those those bonds oriented more conservative portfolios, in comparison to what we have in our local market, are drastically better. Yeah. So with this home biased approach that Polish investors still have a look at the Polish bonds market. Have a look at the Polish stock exchange, which is even worse this year than the Russian stock exchange. And there was a ranking showing that in the first 4 months, the Warsaw Stock Exchange was the worst in the world. Whoever knows why? Because the economy is still growing, still booming, 8% GDP increase in the first quarter. But the situation is that we are still seen as a very, let's say, exotic country for investors. So the answer is global, diversified portfolio, including both stocks and bonds, because if the bonds has the weakest year since 1920, then it can only bottom and go up. Yeah,
exactly. I like this idea. Also, I would stress this point that there's one fact that if all the media and all the ordinary people and, you know, our clients talk about the bad situation, future market drop and everything, usually it means that it's well known, so it's fully priced. And because, you know, the markets move on expectations, and usually when the expectations are fulfilled, or the real situation happen, it doesn't influence the market so much. So this is a good point, and I would like to stress it once more, that the fact that we are talking about all these issues and all the, you know, bad macro factors and everything, bad numbers, all the market knows about it, so it's already priced in its value. So it's also the optimistic for the following outlook. Okay, you answered all of my questions, but I would ask you maybe for some final advice, to wrap it up somehow, to give recommendation to our clients. So again, what to do, how to act, what's the best advice, what you do. So anything you want to say, like for the end of this recording?
Well, the way I act with my personal investments, I basically do nothing, because I'm fully invested anyway. You know, if I'm gonna have any money, I would invest it this time. You know, definitely. My brother is now even like from his lower. I mean, beside his transparent portfolio, he's got some other portfolios, and he is now going more aggressive. He's investing now. Is the time to invest. So I'm definitely talking to him about it a lot, and I think that's the approach. And, you know, if you feel emotionally, you know, like insecure, just close it in your mind. You know, come back to the markets in September at the end of the year. Have a nice summer. Don't get bothered with any market drop, any news. Like for me, like I stopped liking politics in Slovakia, so I just stopped reading those articles. You know, like I wanted to erase them with my mind, because you know, I don't, you know, it's all this arguing, etc. I want to live.
You have just one life,
yeah,
so
easy,
way to
nice
waste
life,
it.
and you know, I don't want to waste it with reading some articles how they argue in the government. I think this can be very similar in every single state here. So basically, you know, yeah, my recommendation would be keep calm. You know, keep with your stay with your long-term goal or whatever goal you have, and you know, do whatever you said you would do at the beginning, and you know, enjoy your life.
Okay, nice. Tamara?
Yes, as Jure says, I don't have a TV actually at home anymore, because I remember years back, you know, when my father was still alive and my parents were always watching not just one news but like 3 news in a row, you know, in the evening, and then it was like, oh, electricity goes up or this or that, and I was like, okay, and can you make any difference regarding that? No. So if you cannot, then just, you know, switch off and don't listen to it. It's going to happen anyway, and you know, there's nothing you can do about it. So basically, with investments, as we say always, you know, the worst thing is not to be invested. You lose the most if you're not invested, not if you are part of some, you know, fluctuations of the market. And this is something that educated investors and our clients and people who know a little bit about investing, and especially those ones who have experience and who have already experienced even maybe corona crisis drop, know that, you know, it's part of life and it happens. There are better days, there are worse, but at the end of the day, if you're there for a long term and if you stick to your goals, which I think you need, because as we say, you know, some things don't change. The fact that you will have a pension, you know, and the amount that you will receive from the government and all these things will be low, so you need to do something about it. And as nowadays there are no any more options of leaving your money in the bank and have some interesting interest rate, like maybe it was when our parents were saving, you know, 4-5% or something guaranteed. You need to do something about it, and the only way to do it is basically investing. Obviously anything else, short term guessing, speculation, doesn't pay off. At the end of the day, we see what losses people have at the moment, the ones who were trying to invest in different crypto values, currencies and stuff like that. So it's something that you need to be informed about what you invest in. You need to know that your investment strategy is created for you according to your needs and your financial potential, and you have to stick with it.
Exactly. Nice said too. Another point to stress out of it, that passive index investing never can lose everything.
Exactly.
You cannot go to zero.
Yes.
Because it means like total end of the world. So it won't happen. So Przemek, do you have something on your mind to add what you just heard?
Yeah, really good advices. I hope my kids are listening to you. I always finish, from compliance reason with investing is risky, but I always add, but not investing is even riskier. Yeah, and that's the case only in the current situation. But for those who likes numbers, we are in the market correction phase. I know I'm repeating myself. It started in February. On average, market correction lasts 3 to 4 months. Then you can draw this conclusion by yourself. Yeah.
Okay. Thank you. Yes.
Yeah, I want to add one thing. Since it's the first time we are doing this in English, I would like to ask our clients or listeners or viewers on YouTube to give us their feedback, how they like it, whether they would like us to record more such podcasts in English to meet maybe more of our people, rather than having them solely in Polish or in Croatian or
same faces all the time.
Yeah. So yeah, if you like it, let us know, and we have actually no problem. But we want it to be always local. We wanted to address people locally, to make
needs.
sure that they understand it perfectly. But if there are a lot of people who love this format, who have no problem with English, let us know, and we can definitely, do it from time to time. So you're gonna see also our faces, me, Rado, and maybe others from Finax as well. So you could see that it's not only about Tamara, it's not only about Przemek or Claudia or all those faces you see usually, but we are here, we are a big company, and there are a lot of people who have a lot of good ideas.
Exactly. Okay, thank you guys. So maybe my wrap up for this video and podcast. So stay calm, keep buying, as Przemek showed us, I don't know, a few days ago, the book, keep buying. The contrarian attitude on the market works the best. So when everyone's selling, you have to buy to be the most successful. And as my former colleague said, the best time to enter market is when there's blood on the street. So it's exactly the situation. I bet if you follow these rules, follow these advices we said here today, I think in few months or few years you'll be very satisfied. So thank you for watching. Thank you for your trust, and see you soon.
Thank you.
Bye.
Thank you. See you.
Dzięki.